Hey everyone! Today I'm excited to share with you that we're going to be kicking off our new series called The Next Multi-Bagger, where we're going to be breaking down and analyzing potential multi-bagger stocks that we can add to our portfolio. Now, the term multi-bagger is famously coined by Peter Lynch in his 1988 book, One Up on Wall Street, where he defines multi-bagger as an equity stock that gives returns of over 100%. Now, with my younger age, my investment strategy is to focus on undervalued growth stocks that have the potential to return over multiples over the next decade. If you're interested in finding the next multi-bagger stock for your portfolio, stay tuned. Now, in today's episode, we are going to be talking about C3.ai, a new IPO that's set to be listed tomorrow, December 9th, 2020. Now, C3.ai is a leading enterprise AI software provider that's accelerating the digital transformation. Now, this company is in a very hot space and is looking to do really good things with its software business. Now, we are going to be taking a look at the company's background, as well as the management, its financials, and to break down to see if it's a worthy investment for our portfolio. All right, guys, well, let's dive right into it. So we are first going to be taking a look at C3.ai's announcement of their launch of the initial public offering. So based out of Redwood City, California, on November 3rd, 2020, C3.ai announced that they have plans to commence the proposed initial public offering. So they are going to be offering 15.55 million shares of its Class A common stock to the public. It also intends to grant the underwrites of a 30-day option to purchase up to additional 2.3 million shares of common A stock, and the initial public offering price is expected to be between $31 and $34 per share. Now, this actually just got bumped up from $31 to $34 on Monday, where it got priced between $36 and $38. Okay, so let's take a little bit of a dive into what exactly C3.ai is. So we can take a look at what exactly enterprise AI is. Now, enterprise AI is a category of enterprise software that harnesses advanced artificial intelligence techniques to drive digital transformation. Developing and deploying enterprise AI at scale requires a new tech stack. So they have their white paper listed on their site. So if you guys are interested, you guys can go ahead and just learn more about that. But in a short summary, a new tech stack is coming because over the past 20 years, the IT industry has boomed and experienced a huge transition from mainframe computing to personal computing to internet computing and now to handheld computing. And as these new technologies come in and rapidly change, there's more of a demand on newer technologies to be up to scale and to be able to handle all these different inputs. Now, what they're saying is the IT industry is now undergoing another major transition. It's saying that the new generation of the 21st century technologies, anywhere from elastic cloud computing to the Internet of Things and artificial intelligence, is driving digital transformation across industry, commerce, and government globally. Digital transformation presents a number of unique requirements that create the need for an entirely new software tech stack. And all these requirements together are really daunting for a company. What C3.ai and their suite is trying to do is come together with a unique model-driven architecture to fully address all the requirements for a company's digital transformation. What they do is provide a low-code or no-code AI and IoT platform that accelerates software development by a factor of 26 or more, which not only reduces the cost and risk, but delivers future-proof applications. Now, we are going to be taking a look at C3.ai's S1 filing, where they list a lot of their investment highlights as well as relevant information for us investors to know about. So let's take a look at some of their investment highlights. For the past year, their year-on-year revenue growth is an impressive 71%. They have 86% subscription revenue. They're listing their addressable market by 2024 to be $271 billion, and they have 1.8 billion predictions per day. So this is what their models and the AI algorithms are doing. They're making these predictions, and they're trying to drive business value by doing predictions for manufacturing and other automated tasks. They say that they have 50 plus quarters of experience running public companies. And this is also one thing to note as well. They are not a profitable company, with having a fiscal year 20 net loss of about $70 million. Now, this isn't strange by any stretch of the imagination with being a fast-growing software tech company, but this is just something to note. C3.ai brands themselves as the world's largest enterprise AI production footprint. So some of the stats are they have 4.8 million machine learning models in production use. They have 622 million sensors gathering data for the C3.ai suite. And over 50 million businesses and consumers are touched daily. So we can see right off the bat how much data C3.ai is processing and how important them getting all these metrics and data are for their business as a whole. Now, what they're really driving as their product is a model-driven architecture. Now, we aren't going to go too into detail about all these different technologies and what each one of these platforms do, but we can take a quick look to see some of their applications as well as their customer applications as well. So they have three main different verticals. They have software as a service, they have platform as a service, as well as infrastructure as a service. C3 has AI applications for themselves with predictive maintenance, inventory optimization, energy management, and CRM, or customer relationship management. Additionally, they have customer applications as well, from anti-money laundering to manufacturing quality optimization. And you can see that they are partnered as an infrastructure for AWS, Microsoft Azure, Google Cloud, IBM, and even on the hardware itself, which is VMware and NVIDIA. So let's take a quick look at the revenue growth. We're looking at a chart that starts all the way from fiscal year 2017, where they had a total of 33 million for the year 2017. In the fiscal year 2018, they had 62 million, which is an 88% year-on-year growth. In 2019, they slowed a bit with 92 million, only getting a 48% year-on-year growth. But in fiscal year 2020, they've seen another acceleration of 71% year-on-year growth to $157 million for the whole year. You can see that they've been posting net losses all the way back in 2017, all the way to this current year as well. To give a quick overview, C3.ai is an enterprise software company. They provide software as a service, applications that enable the rapid development of enterprise-scale AI applications of extraordinary scale and complexity. And all their software applications can be deployed on Azure, AWS, IBM Cloud, Google Cloud, or on-prem. They say that they have a huge total addressable market where enterprise AI software is going to be growing at a 24% compound annual growth rate, which is huge for an industry or just getting started. It started at 18 billion in 2020, and it's estimated to be at 44 billion in 2024, which is a huge jump. I think that's one of the things that makes this whole industry and this whole segment really exciting, is that not only is this technology in the forefront of just getting started, but there are going to be a lot of demand for AI, machine learning, and enterprise software as a whole. They claim that they have a first mover advantage and rapid revenue growth, as we talked about earlier. And one of the things that I wanted to call out about C3.ai is that they have lighthouse customers. What they're saying is a market entry strategy has been to establish high-value customer engagement with large global entry adopters, or lighthouse customers, in Europe, Asia, and the US. These lighthouse customers serve as proof points for other potential customers in their particular industries. They have established strategic relationships with their customers that include many of the world's iconic organizations, demonstrating the utility of the enterprise AI software solutions across geographies, cultures, vertical markets, and a wide range of use cases at small, medium, and even the largest industrial scale. We can see some of their select customers are huge companies, such as Dutch Shell, the U.S. Air Force, Raytheon Technologies, and more. And I think one thing with C3 is that they have a lot of brand value, and they have a great platform and great product that a lot of companies, especially a lot of the bigger, well-known companies, are backing. And this is one similarity that I have to a company called Palantir that is also doing a lot of great work with their product with not only the government, but also big companies as well. And that's really what's propelling them to be a force in the whole data analytics industry. Now, their revenue model is generated from subscriptions, accounting for roughly 86% of their total revenue. They have 4 primary revenue sources: term subscriptions of the C3.ai suite, term subscriptions of the C3.ai applications, monthly runtime fees of the C3.ai applications, and professional services fees associated with training and assisting their customers. So one of the big callouts for the investment thesis is that the enterprise AI industry is a huge addressable market. They have a highly experienced CEO and management team with an established track record of identifying large tech markets, developing innovative, superior solutions to meet the needs of those markets, assembling and organizing high-performance organizations, and building rapidly growing, financially sound, market-leading companies that accrue substantial value to the customers, employees, partners, and investors. So not only do they have a huge addressable market, a first mover's advantage, but they have a patented enterprise AI suite. They're recognized as an AI leader. They have a proven track record of success, high-performance corporate culture, and excellence in execution. Now, we can even take a look at C3.ai's Glassdoor, which this is something that I really like doing when investing in a company, is I like seeing their reviews and understanding their corporate culture and to see how their management works. Glassdoor is one of the best resources to understand what the employees are actually saying about the company themselves. We can see that in 2017, it was voted as one of the best places to work. And in 2018, their CEO was given an award as one of the top CEOs. For a disclaimer, their CEO is Tom Seibel, and he is one of the prominent figures within the enterprise tech area. He worked at Oracle when it was just getting started, and he led it to become one of the giants that it is today. So we can see that it has 4.6 out of 5, 90% approve of the CEO, and 91% recommend to a friend. It looks like a lot of people are really happy with the company and really happy with the future prospects, which is really good for an investor to see. Now, one thing that's important is to look at some of the risk factors. So they've stated that they have a history of operating losses and may not achieve or sustain profitability in the future. Another thing is that their business, they have a limited number of customers have accounted for a substantial portion of their revenue. They state that if existing customers do not renew their contracts with us, or if relationships with our largest customers are impaired or terminated, our revenue could decline and our results of operations would be adversely affected. So these are just some things to keep in mind. These are some of the biggest risk factors that I think would affect C3.ai. One thing to note is that they do have a slowing growth rate. Although it was a 73% in year-over-year growth, it looks like in the last quarter, they only had about 10 to 15% of revenue growth. And a large part of that was because of COVID negatively affecting their sales. And a lot of enterprise tech companies are currently facing this problem of slowing sales because companies are cutting their enterprise resources because they are just trying to get through the pandemic. But when everything does go back to normal, and we should see these growth rates come back to normal, and we should see C3.ai continue to grow over time. Okay, so I know that's a lot of information being thrown at you guys. So we're going to be breaking it down and talking about what my next steps are going to be. So when looking at the overview of this company, I believe it has a great long-term future because of the growing industry, the strong company management, as well as some of the different products and platforms that they're offering. I do think that the space is going to be huge in the next decade, as AI and machine learning are going to continue to revolutionize the tech industry as well as all the different industries that it touches. Now, there are several risks that go into this company, such as having consecutive net losses, as well as slowing revenue growth over the past couple quarters. It's been seeing a decrease to about 10% as opposed to its original 70%. So it's definitely something to think about. I think this company, a lot of people would think of it as a COVID play. However, the way I see it, it's more of a vaccine play because a lot of their customers are these energy giants and these more industrialized companies that have been directly affected by the pandemic. My 2 cents and what I'm going to be doing is I'm going to be initiating a small position tomorrow when it does IPO. So I do have some skin in the game. However, I'm not going to go too heavy because I do want to see how the company progresses over time and see if it's able to deliver on some of its promises to the shareholders. I do believe that this company will beat expectations and will continue to grow over time. So I do think there's a good long-term future to this. So C3.ai is going to be IPOing at about $36 to $38 per share. So I think if you get in around those price ranges, this would be a solid long-term buy for your own portfolio. If any of this information was helpful, go ahead and drop a like for that YouTube algorithm, hit subscribe, and if you're listening to us on Spotify or Apple Podcast, go ahead and give us a follow there. All right, thanks guys, and hope to see you soon. All right, hey guys. So I wanted to give a quick little update. So today is December 9th, 2020. So today is the day where C3.ai IPO'd. And boy, we have big news. So C3.ai soars 138% from IPO price to start trading at $100. Now, if you guys remember, this stock was priced from around $31 to $34 a share last week. And now it's trading at 3 times that. So I think that begs the question, is this stock still worth buying? I think with all the content and all the research that we did before, I think it's still a pretty compelling buy because it's a growing market. The company has a great product and they have great leadership. And I think those are all the keystones of a good business. The only thing is now the valuation. Before, around $35, it was trading about a 14 price of sales. Now, it'll be trading at over 30. And that's kind of hard to wrap my head around. I think at this point, I might just wait on the sidelines, see where it trades within the next couple months or so. But I definitely will have this on my watch list. I think getting the stock from anywhere from below $80, I think that's a solid buy point. And I think this is just a testament to how strong of a demand there is for some of these next-gen tech companies. Well, that's pretty much it, guys. If you can leave a comment down below and let me know what you're doing, that'll help me understand whether or not I should add this to my portfolio as well. Thanks, guys.